Good morning, everybody. I'm Ed Parcaut here with Mike Kelly, and we're Real Estate Jerky Daily. And we do it live 8:30 a.m. Monday through Fridays, and afterwards we upload it as a podcast.
And I'm dancing.
So if you miss us and don't want to be right next to your Facebook while you're watching this, or LinkedIn or YouTube, just go to where you find your favorite podcast.
Yeah,
I like mine on Audible.
Where do you find yours? Audible?
Yeah,
Yeah,
because everything else is there. All my books,
everything.
Yep,
all the things,
everything, even me. Yeah, all right. So not a major news day today. We had the durable goods and loan applications, and I'm not going to talk about the loan applications.
Are they down?
I don't know. In a market where you have no inventory, I could be like everybody else. Oh my God, the market is in the bottom. There's no, housing is down. There's no inventory, and actually inventory increased by 9,000 last week. At the 518,000, which normally we have like 1.2 million,
which got swallowed up in 2 days.
Oh, give me. It's the issue is I watched. They had Barbara Corcoran. They had the dude from the Kevin. What's his name that everybody calls the asshole in the Shark Tank, Mr. Wonderful
Kevin.
Oh, I want to say O'Leary or whatever.
Yeah, O'Leary.
And then the other guy that's on there that has the FUBAR clothing line and all that stuff.
Yeah.
James, whatever. Anyway, they're talking about the market and they're talking about, what do they think about real estate? And they asked Barbara. Barbara said, well, we're going to have an inventory problem, but the best part of it is that's protection. Until we have rates drop, we're not going to see more inventory come on the market. And that's really protection. And the only thing that they said was going to have a problem is commercial office space.
Mm-hmm.
Is where the problem's at. Nobody wants that stuff anymore. They want industrial. They want the places where you shove all your stuff in and forget about it.
Mini storage
units, all those places, stuff like that is unique, but not office buildings anymore. Nobody wants that. And that's where the biggest thing's going to be. And a lot of those, they're able to come in and fix their short-term debt at 5-6%. But now that stuff's like 10 to 13%. And so they're just like, I'm out of here.
Yeah, Modesto's doesn't seem to be suffering the same as the rest of the state. But there is a lot of vacant properties.
I'm seeing vacant office buildings
all over the place. But if you look back, it's been that way forever. Some of these places have been sitting vacant for years and years and years. So you can't say
I'm not talking like the long.
You're looking backwards.
Yeah.
You can't say it's because of this market that they're vacant because they've been vacant forever.
I think okay, we've been in this real estate interest rate problem for a year, right? And we're going over a year now.
Right.
And so a lot of people are like, okay, I'm done. I can't do this anymore. I'm just going to figure another way to do it, because when you only have a third of the properties coming on the market that we normally have,
right,
that's really difficult to have big brokerages and big places, and they're eventually going to say, I don't want to eat up my money anymore and pay for the space. You got stuck somewhere. You're not moving anymore.
No, I'm gonna get canceled. It wants to restart.
Oh well, you can keep going. I'll just keep talking while you go away.
Okay.
All right, you should have done that before we started. But anyway,
I did.
Stocks and mortgage bonds are showing strong this morning. I'm going to do this. Go until he can come back as he's rebooting. The Fed came out, the president of the Minneapolis Fed supports keeping Fed funds rates steady until next year, which means they're not going to do, they're not going to raise it. They're not going to do anything until the beginning of next year.
Right.
The biggest problem they have is because how strong this economy has been, and it's still about us throwing money everywhere. We're still spending a ton of money. That's a problem. And you went away. Interest rates they went up almost 60 basis points since the last Fed meeting,
right?
And so they're nothing. They're like, okay, well that's getting worse. The upcoming October 6th job report is what they're waiting for to see where that number is doing. What's going on with that? By the way, Mike will be back in a second.
Yeah, it's slowly coming back.
Durable good orders is the only thing really news today, besides applications for mortgages, which of course they're down a little bit because it's really hard to have a lot up when you're only at a third, and refinances make up 10% of the market now. Durable good orders for August exceeded expectations with a 0.2 increase, and the core durable goods rose by 0.9, which is almost 1%. I'm getting tired of almost 1%.
Almost. Why don't we just round them up?
I don't think they can hear you, but okay. Core shipments. Who's that? Is that God speaking to me?
It is.
Core shipments, a component of the GDP calculation, surged by 0.7, potentially leading to upward adjustments in third quarter GDP. So, yeah, what are you going to do? Consumer confidence report came out, and it showed a decline from 108.7 to 103 in September, and they estimated that was going to come in at 105. So that indicating a decreased consumer confidence out there. Finally, that the expectation component of the report that they looked at dropped from 83.3 to 73.7, which historically signaling a potential for a recession when it falls below 80. So with that number and the other stuff, you can look at it and say, okay, now they're saying we're going to see a recession coming. I talked about last week when I said we're looking at probably December, January.
Yeah.
And that we'd see changes in a recession coming, that kind of stuff. However, I saw on Facebook yesterday, somebody was saying that their aunt, who is one of those psychic things, said that he's going to come into money, and he's in the mortgage industry, in December and January. So he's like, hey, the rates are coming down in December and January, according to my aunt. You get it?
Yes.
All right. New home sales, I think we talked about this yesterday, fell by 8.7% last month. However, they're still up year over year by 6%.
Yep.
So that's just, I think a lot of new home sales are worried about going forward with the rates. People are like, okay, well, my payment's so high. That's why they're still giving a lot of money to buy the rate down for you. So still look at that. It's a huge place. The builders are selling homes. Even though I said what I said, they're still selling homes not even started due to the high demand. Normally they start a track and then they sell it. You coming in anytime soon?
Mm-hmm.
Sometime today?
Right there.
No, there. Oh, you're back.
I'm back.
All right. So
it took forever.
Well, next time, the first thing
I did. First thing I walked in, I said restart.
Check it. Did you check it?
No, I said go ahead and restart.
And then need to do again.
You need to do it again.
I guess I should have done it when I was here earlier. But anyway, it's like your computer. All right. So median home prices was $430,300, down 1.4% from the previous month and 2.3% year over year.
Not almost 1%.
No, not almost 1.5%, but 1.4%. So what is that saying? Lower price homes are being sold because people can't afford bigger price homes.
Exactly. Because they're out of the FHA range.
But the big thing is that actual appreciation reports show that home prices are setting all-time highs. Did you just hear what I said?
All-time?
All-time highs. New report shows home prices are setting all-time highs, even though the median is down. I know, it's like
crazy,
unbelievable. We talked about this yesterday. I just want to reiterate. Case-Shiller Home Price Index showed a 0.6% increase in July, with prices 1% higher than last year at this time.
Wow.
Yeah. And 0.6 above the June peak of this year. So we're actually keep going on the Case-Shiller. Cities like New York, Chicago, Cleveland are leading in home price gains. I still don't get how people like to move to New York.
I don't either.
Okay, well, you can hold that thought for a second.
Yeah,
all right, the FHFA Housing Price Index, I got one more, and then we can talk about it. That is the one that only looks at single-family homes, right? And so they're saying that reported a 0.8 increase, 0.8% increase in July,
0.8,
and 2.9% year-over-year increase. So they're all showing that everything is going up, not down, not a bubble, not going through the roof. Home values, projected home price appreciation for 2023 ranges from anywhere from 5 to 8% based on through the pace through July, depending on which report you look at. We've seen stuff up to almost 10% in the past few months. But I think they're like, we're going too much. Let's just back it up a little bit.
No, let's not do that.
All right.
So here we go. Thank you, Brad. Yep, I am a little slow.
No, it's not. He's a little slow. He's just been, that computer does not get updated until he sits down there and does it every day.
Every single day.
Because you're the only. I guess there's two other people, but really it's your little computer.
My little thing.
All right, back. I'm not done. Get back over here.
I'm taking it back.
Jeez, boy. No, this one, not the one that shows the hallway for everybody. All right, one last thing. All right, so we talked about rates. Interest rates have increased slightly, and now, according to according to Fannie Mae and Freddie Mac, they're sitting at 7.375 or 7 3/8. That's a 1% rise compared to the same time last year at this time. And then last year, everybody's like, this is 6%. It's horrible.
Yeah. And now they would kill for it.
Right. Well, they just, they'll do anything. All right. Target is closing 9 stores because of retail theft and adding some lock cases to some stores. Well, when any store adds lock cases, it deters people from going there.
Exactly, because
it's going to take 20 minutes to get somebody to unlock this. Retail theft is now a $112 billion problem, according to the National Retail Federation, that they did this report.
Yeah.
So what I'm saying, what they could do is they could just take that. Can we have that 100 billion back from Ukraine and fix this problem?
Yeah, or fix about 100 other billion problems.
Oh, yeah, but so we cannot continue to operate these stores. This is what they said, because the theft and organized retail crime are threatening the safety of our team and guests. That's, and so we're looking at Harlem, New York, 2 stores, and that's 1 store, 2 stores in Seattle, Washington, 3 near San Francisco and Oakland, and 3 in Portland, Oregon. All the woke areas.
Yep.
Yeah. Yep. And I'm only saying that because that's they changed
exactly
the laws about how to arrest people.
Or not arrest them.
Right. So the decision to close the stores came after a company reported that inventory shrinkage, mostly the theft of merchandise, would cut profits by $500 million this year.
Wow.
And in 2022, the profits took a $700 million hit from inventory shrinkage.
Wow.
Yeah.
Shrinkage is never a good thing.
There you go. He's a funny man.
I like Brad.
Brad, we need to talk about your TikToks. All right.
All right.
We can just add a little spice to them and you'd be doing much better.
Oh, you froze.
Did it? Yeah. I think you froze.
And now oh man, there's something going on. There you're back.
You're back.
I'm back.
Yeah.
You were gone.
No, I was still here.
Oh, Not on my side.
All right. Well, who cares?
Change the law. Start locking up the criminal. Kind of simple. Yep.
Yeah, simply. Yeah.
Simply. Look at this.
I can't. Too small.
Well, no.
That's what she said.
I hear it every day.
Close to. This is as of right now, today.
This is as of today.
Scroll down. There you go. Thank you.
Yep.
As of. What week are we in?
This is January 1, 2023 to the 3rd week of September. Or is this the last week of September? I don't know.
Because this week is the last week of September.
Yeah. So this is to today. So we have 462 active properties on the market in all of Stanislaus County.
280 some.
Yeah, we're just hanging. And as you can see, the 2,561 closed transactions, 351 pending. So that's what's going on in Stanislaus County. That's the fact, Jack.
Wow.
Yeah, isn't it crazy?
Yep.
We're just we just kind of hang. Nothing's happening to where it's going to make anything different. People still have the golden handcuffs, as we keep saying.
Right.
And only life events are what properties are listing, moving from here to there or everywhere.
Because they don't have to.
No, they don't have to.
Go ahead.
Why would they, in this economy, take on more debt unless they had to?
Well, people still have good jobs. People doing well overall.
Mm-hmm.
The big thing and that's why but I understand why people don't want to buy. I keep saying this, that you see stuff all over Facebook, LinkedIn, YouTube, TikTok, everything. They're all like, there's these people out there going, this is what's going to happen. There's a bubble. I understand that 2008 is still in people's mind. The difference, we had 3.5 million homes on the market,
right,
nationwide.
Right.
We have 518,000 homes nationwide. So we have 3 million homes less than we did in 2008 on the market.
527,000. Come on.
Whatever it is. It doesn't matter. We normally have in a normal good market nationwide, we have 1.2 million on the market at any time. And that's a normal, healthy market. We're at 500 and some.
Yeah.
That's nothing.
Nationwide.
And Florida is still going through the roof in a lot of the markets. And other places, and we still are. So what was that article I read? U.S. house. That's right. I didn't even talk about that. I did it off air. U.S. housing market is now worth a record $52 trillion.
That could settle the debt.
Yeah. Well, sell everything. So if you look at of the 6 markets that gained the most value since the starting of the pandemic, 4 of them are in Florida. Tampa is up 88.9%. Miami's up 86.6%.
Wow.
Jacksonville's up 82.4%, and Orlando's up 72.3%. That damn Disney. And as a result, Florida has surpassed New York as the state with the second most valuable housing market. What state is the most valuable housing market? Top.
I would think California.
That is correct, because we read this before.
No,
California remains number one with more than 10 trillion of the value of the 52 trillion. So that of the housing market, nearly 20% of the national total Texas and New Jersey round out the top 5.
New Jersey
and Texas. So what does that mean? 20% of all transactions out there are done in California.
Right. And we still don't have enough inventory.
No, we're not going to. If you have low, and Barbara Corcoran talked about this on this thing the other day. Yesterday, I videotaped. I haven't cut it up yet. And she said, this lack of inventory is a protection for values. And a protection for not to have a bubble.
Right.
No inventory is going to come on the market until rates drop. And we're not going to see 3s and 4 rates. We're going to see 5.5%, 6% something rates. And that's the way it's going to be for a while.
And resale homes will never be the provider of all the homes.
No, it's got to be new homes.
You got to start building
homes. The longer we wait on building new homes, the more we're going to have to build.
Yep.
And the more the factories are going to have to come in to build. S2A out of Patterson, if you go check it out, go get hooked up with them. They give a 2% referral for agents and other people who refer business to them for people looking to build a modular home. Modular home is a regular home just built in a factory.
And then assembled on the ground.
90% is done in the factory. The last 10% is done on site.
Yeah. Craziness. We're going to see a lot more craziness before the end of the year. We're going to see some at the beginning of the year. And what do you think is going to happen in the middle of the year?
But I did read an article that normally end of the year is the best time to pick up homes, and people still buy that stuff unless you have weather issues, right? And we're going to have a wet winter this year, so that means January, February, March is going to be super wet. And that means that construction workers, all those people, can't buy homes during that period of time. So if you're one of them, do it now. Don't wait till next year and go, you know what? It's a really good time. Rates came down in February. Let's do this. And they're like, you haven't been working for 3 months.
I know what you should do when it's raining like crazy and you already got your home and you're not working. Refi.
Well, I got one more thing to talk about. All right. So all over the place, there's these equity loans, and they give you money, but they take part of your equity going forward. Don't do it.
Right.
It sounds like a great thing. You'll never be able to refinance your first because of that second. So whatever your rate. So if you don't care, but they're taking the appreciation away from you. So that means if your house goes up by doubles in value, they get half of that value.
It's half?
Yes.
That's crazy. Why would you do that?
Well, and again, it all depends on the size of the loan, right? So it's a percentage of that, and I'm sure by how much you're doing, because people, they're selling it all over the place on TikTok. You don't have a payment. You can get the money with no payment. So it sounds great. This is like that. Give me $3,000 to $5,000, and you can list my house for the next 40 years.
Right.
That's the same thing. So if you're hearing anybody out there doing it,
please ask them to stop.
Well, have them check it out with their attorney or somebody else before they do it, because I don't think they really understand what they get. Because I had a gentleman a couple years ago do it. He came to me during the pandemic when it was a great interest rates, and he goes, "I want to refinance." He couldn't refinance because of that second on there, and we couldn't pay it off either because they have a minimum time to be on there and to appreciate.
Right.
So that's really the fine print on that stuff is these tech companies are doing it not for your benefit, for their benefit.
Absolutely.
So that's just my PSA today.
Pissa.
Public service announcement.
I know what it is.
All right. So just be careful with those types of loans. I've had people reach out to me. Hey, come do these. I know they're just like, what was those stupid loans? The Pace and the other ones.
Pace and Hero. They're super liens. They're actually.
I know, but the problem with them is they go on your taxes, mess that all up. And all
Exactly. But they sound great. You got to pay them off before you get a new loan, or if you sell the property, they sold that sucker as, the new buyer can assume it. Yeah, if they're paying cash,
they can assume it by paying it off.
Exactly. But if they're getting a loan, Mr. Seller,
Yeah.
Mrs. Seller, you guys have to pay that sucker off.
Yeah, well, it's just
And usually it was a ton of money.
Yeah. And just, with the new sales with solar, really read into that kind of stuff because, Anyway, that's all I have for today.
I didn't have anything because I was restarting.
You talked about the market. That's all you had to talk about.
There we go. All right. Today is Wednesday.
Yes, it is.
If you do not
Tomorrow
believe
is
it,
Thursday.
check your calendar.
Yeah,
Tomorrow's Thursday.
Yeah, Rotary.
All
right. If you guys have any questions, reach out to us. We're here for you, and make it a great day.
And remember, I still want to hear from you agents that like to stand in the way of a vacant listing.
Do they just stand out front and not let you in it?
No, they just say, you got to text this person, you got to call that person, you got to do this showing time, got to do this.
Well,
Hey, guess what? Lockboxes are only like $60. Go buy a real lockbox and put it on there.
Or find somebody who's getting out and buy theirs.
Yeah, there you go. I had a guy that knew he was dying. 100%. 100%, Brad.
Yeah. And reach out to some agents and loan officers today, just see how they're doing.
Absolutely.
We don't need any more of what's been going on.
Yeah. Monday's stuff is heartbreaking, and
2 weeks ago is heartbreaking.
Yeah. So no more.
Yeah, just there's ways to get out of it. Bankruptcy for some people. I'm just saying don't worry about what has happened. It's not going to define you forever.
Yep.
I understand this last one was something totally different, but that's still, there's other ways to deal with that.
It just breaks your heart. And enough with the brave face. Reach out for help too, because we can't read minds, but reach out to people that are maybe going through a tough time and just say, hey, I love you. I hope you're doing well.
Yeah. It's the same thing we do for veterans at Challenge 22. Now we need to do it for real estate agents and loan officers.
There we go.
Challenge. Yes. Title people don't have the same problem. Actually, I saw the numbers. Title is down massively with the volume. So I wonder where we're going to see those things change around town.
Exactly.
All right. Make it a great day.
Have a great day.
Thanks for watching.
Stay positive. Bye.